Yo guys, it's Drew FX, so I'm gonna do this long awaited gold breakdown. So here we've got a screenshot and it's the before me calling the price towards 1208 and then 1200s before dark move got towards 1240s. But pretty much this is one part of the video, the second part is literally just me talking about why I'm let low. So as you can see I've got the 50-minute, 1 hour, 4 hour, daily, weekly, and these are time frames that I mostly use. I do trade the 5 minute and 1 minute time frames, and I also do use the monthly for all the flow and levels. But pretty much the high time frame, so this is the weekly, daily, 4 hour, and then execution 1 hour, 15-minute time frame, pretty much. So I'm going weekly time frame and then discuss what price has done. So recently, price was in the contraction. It contracted for a bit, stay in its range, and then expansion to the downside where we can see a drop, a base drop, a classic supply and demand pattern, which this area here is area supply. And ICT talk, we got an order block here from this range, from this high to low, and then refine that order block and then refine this area supply into this block here, and then the open comes in at 1293. So that's my target for longs, 1290s pretty much. So what you can see here, price contracted, and then expanded to the downside. What is the price doing? It's literally neutralizing those stops, taking out the stops. So you got stops on this low here, this low, this low, this low. And where's price looking to go to get drawn to the area of demand? This order block here, this area of first demand. So you see this price trading into this area of demand, and you get this nice area after testing it. And then this alone here shows you the, indicates the buying pressure that this candlestick kills. A thick red candle like this, and then you can see that the lower leg, from the low, the wick low, the body. You can see that. You're not really too interested in the candlesticks patterns, but I should. This is the pin bar. You should correct me if I'm wrong. That note as well, if you hear any noise in the background, can't hear me properly, I've got a cold, and obviously I'm with the family, I still have room to record, so apologies. So, once price reacted like this, you've got this contraction phase, and then you can see expansion and whatnot. You've got the daytime frame, all the block here, first of the supply, and then you've got meditation. It leads to the 4 hour time frame. So, this daily block here, equilibrium of this daily block is my demand level, boom, and then we got this intermediate high here, which is my supply level. So that intermediate high is weekly. It's a weekly intermediate high. Boom. And then obviously go to the 4 hour time frame. This is the part of the screenshot. So as you see, I mentioned about the price. That candlestick reaction. Boom, creates a leg here below. And then you got equilibrium D block, which is like demand, and then intermediate high weekly is the weekly supply. So notice here on the presentation that the price will be drawn towards the gray pool. So the stops right here, the tops. And we've got some support here too. Around 1260s, I believe. Intermediate high over here. And also the first area supply would the price higher, which has. What we also have is top of right underneath intermediate lows. Boom, boom. Both intermediate lows over here, but these are the most important lows, in my opinion. And then also more orientation explain to me that demand tested again, expands to the outside, the buy pressure takes out the high and price out the range. So here is what I have a trader sample which I posted on Instagram, and I believe I did post a screenshot from Trophy with the what's the thing called again? The stop loss and TP for that. I forgot what it's called, but I had everything there. So before we get to this point, let's talk about this. Supply level lose significance of price less significant drop and hedge number. So here, I'm talking about two types of manipulation. So this first manipulation here is one, it is shaking out traders, anyone wants to go long. Two, it's sucking in traders that don't want to get in short. So it is literally engineering liquidity. By that, one, if you look at this key support and resistance here, this level here to a newbie, it's like it would probably be a strong level, but it's not, because this is the level of supply. And how I trade it is that, as you see, each time price wicks it, it's taking out orders. As you see, the wick here. So that was like a nice green candlestick, and you drop down, you use a wick, you wick here, wick here, wick here. It's someone buying up to someone's limit order for some. So I also mentioned about trading that someone else on the opposite side of trade. This is what I'm talking about. Someone is buying and you're selling. And someone is selling and you're buying. So I was saying, like, it's entering liquidity for those that are needing. It's trapping them, because if you compare the demand to the supply, demand is cleaner. So when you see manipulation, the second part of manipulation is this here. Clean levels, taking out stops. If you get stops, because the level of demand, which is clean, and has a lot of orders there, like, it has a lot of significance compared to the supply. Price will, 9 out of 10 times, more time, will respect it. Unless there's further manipulation or news impacted where, it's causing havoc, fear messing out or whatnot, continuation of expansion. So what we see here is that this face here is taken up, or this leg here is important. Because as you can see, price has tested about this level about 5 times, and it's hanging around the level. It's losing significance. Like, price is not showing conviction that it wants to drop. Every time it did this test here, the 5th test, when it did, boom, it taken a lot of back inside again. This drop here, straight drop, taken it out. And you see price testing breaker or something right here, or anything right there for them, the sell from area supply again, long time frame, and they're taking up most buyers that were right. They're alright. See, they're not wrong to buy. Like, nobody's wrong, because you can make money by selling and buying. But like, they got taken out, and they're probably just hitting themselves. I think it's the bigger picture is that this, the market makers, the big boys are engineering liquidity just for this move here, this free money move. As you can see, because the intermediate high here, the key high, and then obviously this key high over here. So this intermediate high here, create more intermediate highs, have further liquidity, and more, and then obviously plus the liquidity upside already, and the first area supply. Price will get drawn, and it's going to create a nasty buying pressure just happen here. So me saying about the buys getting shaken out, it's literally someone getting this new floor, probably got in the retrades, not retests, retrades, so price and no time for the test this level, and then going to move and the whole picture of money they should have. I will put this up on the floor. Likewise for those that got into this new floor, just missed the block. Put it stuck on there, or usually it's high, not so low. And what happened? Bang! Taken out. They're out of the game. And also, likewise, for those that's selling, they're probably thinking this is going to go for the lows. That this is definitely going to take a low. The low in that, this level of demand is clean. So when it retests this level, you get the buying pressure again. You see price falls over the level, trades up into the supply, drops, tests the area of demand. Confidence in the daily order book EQ, then boom, expansion to upside, back up to the premium rates of the range, to the high, so supply. So then after that, price came back and declined back again to shake out more traders that were right. Price gave you enough opportunity to buy. And what did you do this time? You tested it, contracted as well. So test the level of demand, contracted, and then the expansion was nasty. I got into this review, and it's one of many moves I got into where I see price contraction. I'm in before the expansion. I got paid the free money. So you see the liquidity, the price expansion, back for release phase, taking out all this data. So take out the time, price continued, creating all the block price hold, and then we get to here. So like classic support resistance, an area of supply, once broken, will become area of demand. Like say support potential resistance, and vice versa, resistance support. So the same thing with demand to supply. So here, this area of supply will become demand. So as you can see, I've got 3 plays. So price, continuing to hold is going to block here, continuing to rise back towards the 12 weeks to the other side. Or the short scenario, which I didn't take, I'm honest. So as you can see, you've got price taking out the stops here, the stop grade, and then you see a breakdown. Price taking out this on the block here, and then filling in this thin price move. So this void. So what happens and what I predicted was literally price retest is at 1208. But if we see a further decline, I believe price will come to test 1200s. So if you get the range of Fibonacci from the range low, the range high, equilibrium, you get equilibrium of this range here, which sooner you can split this range into premium at the top of the range, out top of 2%, just the top of the range, and discount from the bottom of the range, I believe 50%. So like that. So here, this is the 2 plays, and I fully weighed on my ass, hands on my bum, waiting to get forward. So if you go to the live chart, you'll see what price done. It's literally overall hit them face with the 3rd play. So it did, didn't run away from Torre. I missed this move here, but it happens, I missed 1,000 moves. But what you can see is that price didn't want to go higher. You got all the block here. You got a block coverage of a breaker, all the block, and you can see how price trade between the levels. More importantly, literally just trade the all the block. This all block held and decline. So once price declined, it did give you the initial, respect to total supply level, not demand, but that's usually just chopping buyers, they get screwed over, and then it declined to the 1200s. A big figure. So that's one thing that price does when trading range or range by price action, is that it will test the area of supply or demand. But some more time, or most times, it will look to take out further liquidity into the, so it can go as deep back into the equilibrium of the range, or even further back to the demand, and then price does a mark up. So this time what we see price marking up from the equilibrium, I think it's just above the equilibrium of the range, but obviously expecting a big figure 1200. I'll screenshot it. Let's just go off by head. So if we go 1 hour time frame, we have this another range by price action. This is 1200. You've got all the block here, you've got area of supply, you've got 2 areas of price trade between. So now I have area for me to buy with contraction again. But if I remember correctly, I think it's based on a 15-minute time frame. It's 16 hour, the equilibrium of the hour block. And then we got a 15-minute order block here too. I think an equilibrium well. As you can see, price is just, taking out this out. So that's SPY level. But clean black, it's clean black and white, but still, as you can see, like the bullet, like me being net long, I just want a longer shout gold. I'm looking at this like the price is gonna hold between this level and compare this level to demand. For me, one of demand. Demand's cleaner. And soon, what this level gives way, we're gonna see price going back to 1200, 1220s, and watch it there. So you're gonna see this intermediate has get taken out. You're gonna see price change into this oversupply and more. So as you can see, price did that. The 15-minute time frame. And to be honest, I feel it was a bit rushed this video, but I hope like you guys understand where I'm coming from. But if you guys didn't miss something out and didn't understand, you can hit me up and then I can explain it further. Okay. Boom. Clean. Even shows you the market structure break. So as I mentioned, hourly order block equilibrium and probably 15-minute equilibrium too. So the range lows or range low, the range high. You see the how price trades between the two. 15-minute time frame. You can see how it's not really that black and white, and see how price not convinced to even drop itself. It's being manipulated. So when price drops back into its area, retest is up. You got the market structure, the market structure break. So once you see price taking up these orders, and then price returns to order block, which I like to call MSB plus P double O. So market structure break plus point of origin. So price going back to the area of origin where this upmove occurred from or happened. So price taking out this market structure, indication that it's higher, and then return the area of origin. It's all block cure. It's quite its move, and then it's full expansion to the upside. Voila, it's not that hard. And going back in the 20-minute time frame, it gets me back to the trade I taken this last week. Because I know the week before as well, because once it's taken out expand to the upside, I did expect this level of supply because of demand, and this happens more time in lower time frames. Is that sometimes you don't get the initial reaction and response, or the initial move that you predicted doesn't happen. Like you predicted it would happen, but it didn't happen. Sometimes this thing happens where it goes further, take a further liquidity, and what it has to do is price to go further up. And what you see here is that you've got the level of supply now against demand. You've got order block, and then also you've got market structure here. So what we see is that price passes through, expand to the upside, and then also what we see with profit in these phases is that it's going to slow down and it's going to retrace back, retrace 50%, 70%, whatever. It's going to retrace back, and it's going to form a higher low, or a high low, or a lower high, depending if it's uptrend or downtrend, whatever the market condition is. What price did in this scenario is make a higher low. We got order block, confluence of the area supply. That's another month. We've got a nice area to buy from. I bought from here. Hold the trade. Got an identity breaker. Or this pivot. And just note this pivot here. This is really important. We've got a secondary test. It's taking a steps here. Got key low. Price, hold it around the point again. And then get the expansion to 1225. Nice. I'm not going another move here too. So if I was to expand this here, Let me see, is this the one? Is this the one? Is this the one? Oh shit, this is the one. Okay, you put it to the... Oh, I can't do that. That's nonsense. Okay, cool. Change that to 100. Still gonna be... That's alright. That's okay. So this pivot here, yeah, is a key pivot. So think about it, we've got two ranges. So we've got this range here, and also my screenshot on the mobile, which I put on Twitter and Instagram. It was 12.15.10. So that was like a market structure holding price as well. And I knew it was priced at that level gives way prices expanding to that extent. And look, this is just, the pack came in, you said you're younger, OT, you want the pack gone. All the kitty them, okay, buy bits and bobs in that. And then that young buck comes back to you, gives you all the puff, you drop him for 2 bill, 3 bill, there for a nice gesture. That's not actually what price is doing for me right now. Like when you're in the move before the expansion, it's nice. It's a great feeling, but it's systematic. It's like it's getting in. I'm just being deneutralized to that feeling that oh, I can't catch this, because the market gives out these moves every fucking day, every fucking week, every fucking month, every fucking quarter. It gives these moves out, but it's having an eye on what price is doing. You can get into this move and you just can live off this fucking move. Because you've got the old heads on Twitter talking about you can't do 3% per day, you can't do 3 hours, whatnot. They're limited themselves. When someone limits your potential success, I do say it the first way, you're allowing the moron to stop you and play, and allowing you to hit their limits into yourself. And you should never let anyone put limits to you, because you can achieve anything if you put your mind to it. So, from 3 years ago, and literally 3 years now, I started trading live proper, December, man wasn't getting these moves. I wish I was getting moves like this. And if I did, I was like, yeah, gas, curl up. Now, it's just a natural thing that happens. And man never did the same thing. Anyone can do it. It's just putting the time and the right things. Sometimes maybe trading range is not for you, but if you know how to get cool highs and lows, you're great. Note that. That's your niche. My niche is raising ground and calling highs and lows. But I get more ranges than I do highs and lows. And when my life is set up, I can't be on my freaking laptop or my phone looking at the charts and for highs and lows. So when you see price doing something and and you've seen this hundreds of times, it's natural, like a backhand. But before I start chatting more shit, my wife, like, dropping real gems, we'll just continue this video before I have to look off, because I have foot control and obviously spend time with the family. So this pivot point here, this pivot is key. So we have here price going above, and what I mentioned about the range before and how ranges trade is that what price did is just continue ranging above, and then price shut itself. So as you can see, what did it do? We've got a key high, we've got areas of supply. This is also a thin move down, so it's to the downside, and then price changing the range. Wow, again. No shit. So that zone here was marked out from Huawei. That is that pivot zone. And look how price just to its area again. Just 5 minutes, man. This is the last 5. So I'm gonna wrap this up in this last example, because the missus is on my case. So guys. So I will do part 2 later on, or probably tomorrow. But literally, as I mentioned, key high, thin move down. The pivot point from flipping last week, you want to see price trade back into the range. What you see is that price traded in the range again. So market structure here, price fell to close below it, But they close below hit this before. As you can see, instant reaction. Green card. Right off. The supply is literally structure over here. I think it's in the 5 minute time frame I have clear market structure. As you can see, to compare demand to supply again, demand is clean. Clean. And that two forms of manipulation, as you can see, is the shakeout, the stop rate taken out stops here, and also engineering short liquidity, getting them sucking in them bears, the fucking bear cunts that have been fading for the past month or so. So what it has done is triggered them to just selling and selling, thinking this is gonna go lower, it's gonna go lower. You know what price did? Raid into back to the area of demand now. That pivot zone. See the contraction. Boom. Expansion to upside, taking out these stocks. I was a bit flamboyant for those you say fuck you bears and whatnot, but it was just funny that the way I trade gold is that I'm a buyer when everyone wants to sell, I'm a seller when everyone wants to buy. And that's how I've been trading gold. That's how I've been working gold, because a lot of people are too late to the scene, and gold is a commodity that also this is my cryptocurrency, because people get into this move too late, and when I know a lot of people get into this move too late, that's when it's time to start fading gold. That's when it's time to start selling stuff like that. Because I've been calling highs and lows in gold for the past year. Not to be cocky, it's just something I enjoy trading. Like I talk to man about gold. I look at what gold's doing. Even days I'm not trading, I'm looking at gold, seeing what it's doing. I'm making a note of price action. That's how I'm good at trading contraction. It's not like it's sheer luck, or you just got the truth by luck or whatever, or you just waiting for this move with confirmation. It's just me understanding what price is doing. I put 2 levels, and obviously I'm not gonna put a rectangle because I could get sued by ICT, but I have the 2 levels. See the price is trading between 2. Of course, I'm gonna miss. Sometimes I could be in this move here and I get stopped out. I could be in this move up here, and I can probably get in the move up here or whatnot. Not all moves are A class, but if you're making money and you're hitting your targets, that's all that should matter. Not what some Tom, Dick, or Harry care about it. Whatever they say on Twitter. If you're doing something that they say that people can't do, you can stay quiet like I've been doing. You can laugh about it like I've been doing. And you can make a comment like I also have been doing, but it's just them ones that shouldn't be too phased. It's just like, this video is just me just breaking it down. Like, how I look at gold, why I'm letting go. And probably the next video that I'm going to look off now, the next video is me, the next move. So as you can see from that pivot point right there, stop rate expansion to the upside. And then obviously this market structure. Oh, that's the next one. And obviously the market structure here, tested again, which I mentioned in the tweet, 12.15, 12.16, and literally I didn't even get into that move. I missed the move. And as I said, like I'm not in a single trade. I missed this move. But boy, how I made it up, man. You got the market structure here, I made it back up. So just look at that. This man's like, it's beautiful. Like right now, just looking at it, I mentioned the gold group chat. If you're interested in trading gold, and gold is something that you like to trade, and you're just as passionate as I am, just join the group chat, share charts. There's some serious gold traders like man Ed, guy that trades gold with no stop loss, slapping standard lots, mad thing. Like, just share ideas, bounce. People will get faded, so don't be bitches. It's one of the rules here. And also, we talk about other trades as well, or other pairs, but just make a community just for gold, in it, because there's a lot of people slapping gold in silence, and there should be praise too. You know, everyone should be talking about and sharing information about gold and whatnot. It's something. But like from here, I was looking at it. Gold test 1240s. You can even go even lower, like 1238s, and then bounces to like literally from there. Area demand up there. You get a pen, whatever. Drops lower, weights above, retest every hill, and go higher to 1260. That's just literally a short. Until like, I come back here for football training and show you my analysis and talk through it. You want to see price takes it under demand, goes higher, take out this intermediate high hill, you get that intermediate high hill. So like 1260 is my target. And obviously, what's this? Basically 1266. So basically between 1260 and 1270. Nice area to exit. But yeah, I'm gonna knock off the video here. A bit rash at the end, I apologise, but I'll be professional in the next video and be slower on my approach and whatever. But any criticism, any advice, anything, just hit me up. If you think I can improve in how I pronounce things or how sorry. Jesus, man. Well, how I'll address anything, or just my whole approach.